What is going on, investors? Hopefully, you guys are having a great day out there. Time to talk about Bank of America Corporation, ticker symbol BAC. This company just reported earnings just a few hours ago. I've been going through them, and I will walk you through all the important things that I think you need to know as we analyze Bank of America's Q2 earnings. We'll take a look at them. They were benefited by a positive tax adjustment, but we'll talk about some macro stuff too. One of the things that I love about looking into bank stocks is not only do we get a window into what the bank is doing. So in the case of Bank of America, we've got an ongoing buyback. We've got an increasing dividend. Those types of things are stock specific for Bank of America. The other thing, though, is we get to look at a window into the consumer, especially when we're talking about a bank like Bank of America, which services millions and millions of people here in the United States in particular. So we'll take a look at some of the trends with credit cards. We'll take a look at some of the loans and things like that. We know that when we've been looking at Bank of America over the last year or so, total loans have been declining. And that's obviously a negative trend for a bank like Bank of America, which makes the majority of the money or a fair portion of its money and profit from loaning money out. Okay. And so we'll take a look. Has that trend reversed? Are we seeing a bottoming and maybe a potential increasing of loans as well? We'll jump into the numbers as well. Take a look at them. We'll take a look at a valuation metric that I think is important. And then finally, we'll get over the stock chart, which I think is very important with Bank of America. We've broken trend with this one, okay? It is broken trend, and is this a temporary trend break? Are we heading lower with Bank of America? We'll talk about all of that. So first things first, we'll jump into the Q2 earnings. They were helped by the recovery, which we'll see in terms of its credit card data and its loan mix, and also a positive tax adjustment, also loan loss reserves, which we talked quite a bit on yesterday's show when we talked about JP Morgan. They are benefited from that as well. Now, this just came in right before I started recording this video. Federal Reserve Chairman Powell's testimony came in that he is set to give today that inflation will remain elevated in the coming months. I don't think anybody's going to argue with him, but where the argument comes from is he thinks it's going to taper off, so to speak, or get better as the year goes on and supply chains starting to loosen up. But one of the reasons why we keep an eye on inflation when we're talking about Bank of America or any bank stock is high inflation means that the Fed will at some point, you think that they would have to do this. They don't necessarily have to do this, but one of the ways to fight high inflation is by raising interest rates. You raise interest rates, that helps bank stocks like Bank of America. So if you think inflation is coming sooner rather than later, and the Fed will have to make moves on that in terms of raising rates, well, bank stocks like Bank of America might be a good buy. Now, in terms of their Q1 highlights, we'll talk about them when we jump into the numbers, but what I wanted to show you is they still have this $25 billion ongoing buyback program that was started in April 2021. So they've been purchasing about $4.2 billion in the quarter, and guess what? They offset shares awarded under the equity-based compensation plan. So basically what that means is if you're an executive at Bank of America, you get paid with shares of Bank of America stock, and then you get to sell it back to the company through the buyback. So what a great gig that is. And they've paid about $1.5 billion in common dividends in the quarter as well. Now, they announced the expectation to increase that dividend by 17% in Q3. So obviously, if you remember, the Federal Reserve had all bank stocks pause buybacks and pause dividend payments over the last, I think it's been about almost a year now. They were allowed to resume that, I believe it was earlier this year. So Bank of America accelerated that very quickly in terms of their buyback and their stock dividend. Obviously, that's beneficial for you, the shareholder, especially if you've held this stock for a long period of time. Now, let's jump into some of the slides. Not something we normally do here on the channel is looking at slides and stuff like that. This is stuff that the companies kind of want you to take a look at. Not always something that we take a look at, but I think this is kind of pertinent with the macro environment that we're in. We see credit and credit debit spend here. We're seeing what I like to do is compare it to the 2019, because that's when things were kind of all good, right? 2020 was kind of an outlier year, wouldn't necessarily do a lot of comparison to that. And so we're seeing, though, retail spend still up versus 2019. We're seeing services up as well, food up big time. Travel and entertainment hasn't come back, so that should still be bullish for not only Bank of America's spend in those categories, but also stocks maybe like airlines and hotels and things like that. We haven't seen that segment of the economy fully recover. So you'd expect that at some point, since all these other categories are already there. We see gas up quite a bit over, a little bit over 2019, quite a bit over 2020, because obviously you've got business travel, commuting travel, and things like that are coming back. Now, the other slide that I want to show you here as well is credit card days past due trend. We're still seeing this. Obviously, if you're a bank like Bank of America or any bank that offers credit to customers, you don't want them past due, right? Okay. Also, what this does is this gives us a window into the economy. If people were really suffering, if the average consumer out there was really suffering, their credit cards would maybe be more past due than they are. Back in 2019, before this whole virus thing started, consumers were more past due on their cards than they are today. So it still shows evidence that, number one, consumers could get more past due on their credit card balances, and it still wouldn't be very alarming, at least in terms of comparing it to previous years. We're seeing basically across the board, we're seeing some tick up, okay? A little bit of tick up, but we're still historically low, at least compared to 2020 and 2019 levels in terms of past due trend. Now, here's probably the key slide, here's our daily loans and lease balance trends. Obviously, over the last year, we've just seen this fall off a cliff. Okay, demand for loans ex PPP. If you threw in PPP loans on here, this graph would probably look a lot different. That's why they take PPP loans out of it, because those are kind of an extraordinary type of event, extraordinary type of loan. This is your just average loans that most consumers can access and historically have been offered by banks like Bank of America. We have been seeing declining credit cards, declining residential mortgage, believe it or not, mortgage decline. All loans are declining. What are we seeing? Potentially bottoms forming in all this. In fact, Bank of America loan balances actually increased during the most recent quarter. That is a positive trend. If you couple rising loan demand and eventually rising rates, boy, that's a absolute winning combination for a stock like Bank of America. Now, ending loans and leases, here's basically evidence of that. So last quarter, we were sitting at I would assume this in billions, 903 billion. We ticked up. These are total loans and leases up to 919. So this is strong. We're seeing this start to flatten out. We were seeing this. I was watching this. If you're a fan of the channel, we've been reviewing Bank of America, JP Morgan, those types of banks, just seeing this decline. And I'm thinking, wow, when is this going to reverse? We're seeing a little evidence of it right now. Again, if you couple increasing loan demand with potentially higher rates, absolutely winning combination for a bank like Bank of America. Now, let's jump into the Q2 financial results. Not a lot to go over here. So if you've made it through this video so far, pat yourself on the back. We've got a little bit more to go, and you want to stay around for this stock chart because you don't see trend reversals like this that often. And when you do, it can create opportunities to buy the stock or make trades off that as well. So we've got our financial results here. Left-hand column is Q2 2021. This is our most recent column right here on the left-hand side. The column right to its right is last quarter. So we get a quarter over quarter view here. And then all the way back here was last year. So we get a year over year view kind of going that way. So our net revenue came in at 21.5 billion. That is down year over year. We were at 22.3 last year, and quarter over quarter, 22.8 billion. So despite some growth in loans and things like that, we're still not seeing revenue tick up yet over at Bank of America. Again, increasing loan demand with potentially higher rates would offset that and would get us back on track. Here's our reserve build or release. Okay, here's our provisions for benefit of credit losses. That came in at 1.6 billion. Okay, that's a credit. We credited ourselves 1.9 billion. So this is basically last year in Q2 2020, we set aside 5.9 $1.1 billion over at Bank of America because they were worried people were going to default on their credit cards. And I just showed you a graph. People are not defaulting on their credit cards, even going back to 2019 when things were all good and the economy was incredibly healthy in terms of employment and things like that. Now we're seeing Bank of America able to release that back into the company. So that is going to benefit our net income number. You come down here to net income, you see in Q2 of last year, they made $3.5 billion. Sounds really good, right? Okay, but it included $5.1 billion that they had to provision for credit losses. Now you get to add some of that money back and you make $9.2 billion. So if you want to take that out, what are you sitting at about 8.6 or 7.6 billion dollars. So coming down to pre-tax income, we made $8 billion. Here's that income tax expense, or in this case, it's a benefit. So they got a credit. It was some kind of tax deal they did. I think it was like in the UK, they got a little bit of a benefit. So there's $1.2 billion coming back in on there. That's making this net income looking even better than it potentially is. All things being considered, though, things looking really good over at Bank of America. Even if you don't want to give them credit for this provision for credit losses and you want to take away this income tax benefit, still earning quite a bit of money and still doing quite well, especially when we compare it to a year ago period. The last thing I want to show you is just from a traditional valuation metric. I like that Bank of America actually shows you. They show you the book value per common share here is sitting at $29. Historically, that's up a little bit over where we've been. Now, here's the tangible book value per common share. This is typically the valuation metric that if you want to pull out, we don't always do that here on the channel, but in terms of bank stocks, I don't mind looking at tangible book value. It's essentially if you liquidated everything over at Bank of America, what you would be left with, you'd be left with about $21 per share. Now, obviously, Bank of America is trading at $38 per share, so you're thinking, well, maybe I'm getting ripped off here. Well, you're always paying a premium. Think of that as like a price to sales or price to earnings. You're paying a premium for that price to tangible book. So in Bank of America's case, you're paying 1.89 times tangible book. And you might ask yourself, is that historically expensive? And the answer is yes. So here's the 3-year price to tangible book chart for Bank of America, and we're seeing it peaked right before kind of the virus, and it peaked up here. It was trading at the 1.75 times. Now it has run up, and it has run up considerably. I think 2 reasons why we had such a run up. Well, number one, you had interest rates rising earlier this year, so people were piling into bank stocks because that is a positive trend for Bank of America. Also, you had the fact that Bank of America was able to reinstate buybacks, reinstate a growing dividend. That also had people piling into Bank of America stock at these lower valuations. In my opinion, lower than 1.75 is probably somewhere where you want to get with Bank of America. So it's not surprising when we get over to the stock chart, we made a monster move in this one. Okay, just in November, we were sitting at $23 per share, and it went all the way up to like $43 per share. Okay, this is a mega cap bank stock. You don't normally see that type of move. Obviously, with interest rates rising, economy reopening back up, people piled into this trade. And now I think we're starting to see people start to unwind that trade, take some profits, because what are we seeing here? We're actually seeing a trend reversal. So we were on an uptrend, and once you break this trend, big old red candle here, and it came back and retested this uptrend and got rejected again, and we're coming back up. Retest, came back down. We have a high here, a lower high here with Bank of America. When we see these types of trend reversals, couple things tend to happen, okay? This trend stays intact. I would not want to step in here with Bank of America, okay? Unless you are doing something like a shorter term trend, because we are seeing there has found a level of support here literally right where the stock is right now at $38.50. I actually think down here at $38 even is probably a little bit more significant area of support because you have some price price action down here holding it. The only way I'd play this, if you want to jump in here with buy Bank of America, is you're buying down here and you're buying the pop back up, okay? Because we'd see a pop back up. That would actually be something that we'd anticipate here in the coming days and weeks ahead with Bank of America, as we come down here about 38 and then pop back up. What you're looking for in this trend to reverse is you need to get back above the previous high, which is right around $40 per share, $41 per share. Okay. Otherwise, this higher low, higher high, lower high, lower high, we'd assume that this continued, we'd make another lower high, and this thing would just continue to go down. Now, the other thing that I anticipate to happen with Bank of America at some point is we start channeling sideways. Okay, we saw that with the JP Morgan chart yesterday. If you want to look at that video, you can search our feed. That stock channeled sideways for a considerable amount of time. We also saw it with Facebook and Apple and Amazon, and a lot of the tech stocks have been channeling sideways. They make a monster move, they trend reverse, then they find footing and they channel sideways. So it could be that Bank of America just finds some footing here and kind of bounces between, call it $38 per share and $42 per share. That wouldn't necessarily be a bad place to accumulate the stock, considering the trends we talked about with the loans increasing, with potentially interest rates rising at some point, although Federal Reserve Chairman Powell says that's still a ways off, okay? A ways off could be the end of the year, could be into next year, could be 2 years from now. Who knows when that could potentially be? But what I would do with Bank of America, just looking at this chart, I'd wait for a bottoming formation. Okay, we reverse trend here, and when you see a bottom is when you come back up here and increase the share price over and above where our previous high was. So you're looking for a close above 40, even 41 on this one, and looking to maybe retest this area at 42. So that's what I'm seeing with Bank of America. Wouldn't necessarily run out and buy this one. It is a stock I would like to accumulate to a certain degree, but I'd like to accumulate it either on sideways consolidation or potentially if we break this 38 level here with Bank of America, this thing could potentially head much, much lower. Okay, it made a monster move and it made a monster move really quickly. If we break 38 level, we could churn through this price action rather quickly and get all the way down here to $32, $33 per share. These areas down much lower with Bank of America could present a much better buying opportunity than we see at the current moment. But as long as the Fed has the stance that inflation is temporary, not only do they need the stance like that, but the market has to believe them and believe that they can control that. Bank of America stock might stay under pressure as interest rates continue to pull back. But stock's been on a monster move, up 64% over the last year. A little bit of give back, not necessarily a big deal with this one. So hopefully you guys enjoyed this video. We'll be back again soon with more. Good luck with your investments.